the US dollar was on track for its biggest monthly gain in nearly a year on Monday, supported by growing expectations of Federal Reserve rate hikes and continued optimism about the US economy, while investors closely monitored developments in the Gulf ahead of a key US jobs report later this week. The United States and Iran exchanged fresh attacks over the weekend before agreeing to halt hostilities and hold talks in Qatar on Tuesday, keeping investors cautious about the fragile ceasefire and pushing oil prices higher. The euro edged up 0.2% to $1.14 after touching a 13-month low against the dollar last week. Despite the slight recovery, the common currency remained on track for a 2.4% monthly decline. The dollar index, which measures the greenback against 6 major currencies, was little changed at 101.34, remaining close to last week's 13-month high. The dollar has strengthened against every major currency this month, posting its biggest gains against Scandinavian and Antipodean currencies, which have fallen between 4.7% and 7%. The dollar has been supported by rising inflation concerns, expectations of higher US interest rates and continued investor demand for US assets, particularly technology stocks benefiting from the artificial intelligence boom. The greenback is on course for a 2.5% gain in June, marking its strongest monthly performance since July 2025. Latest data from the US market regulator also showed investors held their largest bullish position in the dollar since 2019, with long positions valued at $36.4 billion. Markets are now awaiting this week's US employment report, which could provide fresh clues on the Federal Reserve's interest rate path. Money markets are currently pricing in one rate hike this year, with around a 50% chance of a second increase before year-end. The Japanese yen traded around 161.86 per dollar, remaining close to its weakest level in 4 decades and keeping markets alert for any possible intervention by Japanese authorities. The Swiss franc strengthened modestly for a third straight session, while the British pound remained steady at $1.322 after hitting a 7-month low last week. Investors are also watching political developments in Britain, where Labour politician Andy Burnham, the front-runner to replace Keir Starmer as Prime Minister, said he would announce cabinet appointments only after the leadership selection process concludes. Markets are particularly focused on his choice of finance minister and any signals on future fiscal policy. Attention will also turn to the European Central Bank's annual policy forum, where ECB President Christine Lagarde opens proceedings on Monday. A key policy panel on Wednesday will feature Federal Reserve Chair Kevin Warsh, whose comments are expected to provide further guidance on the outlook for US interest rates. Gold prices fell on Monday as Middle East tensions fueled inflation concerns and reinforced expectations of further Federal Reserve rate hikes. Spot gold declined 1.3% to $4,035.79 per ounce, while US gold futures for August delivery fell 1.1% to $4,050.02. Bullion is now on track to fall more than 10% in June, marking a 4th consecutive monthly decline after losing 1.7% last week. Investor sentiment remained cautious despite reports that the United States and Iran had agreed to halt recent hostilities and resume negotiations over the Strait of Hormuz. However, fresh military exchanges over the weekend have kept geopolitical risks elevated and contributed to higher crude oil prices, raising concerns about inflation and supporting expectations of tighter monetary policy. Markets continue to price in 3 Federal Reserve rate hikes this year, including about a 61% probability of a September increase. Investors are now awaiting the June ADP employment report and the US non-farm payrolls data later this week for further direction on monetary policy. Among other precious metals, spot silver fell 2.3% to $57.82 per ounce. Platinum declined 1.6% to $1,588.01, while palladium edged up 0.3% to $1,212.61.